You own like Joe Random Yo-Yo coin, and you're owning it to flip it on Saturday night, depending upon which way a football game goes. Okay. That's the destiny of the asset, right? It's going to be short term because the people are short term. Whenever you buy anything, you got to ask yourself the question: what's the character and what's the intent and what's the strategy or the belief system of the people that are buying the thing that I'm buying? If I buy real estate in New York, right, you'll eventually sell it to someone else who swears that New York is the apex city. People that love New York, their opinion is there is no other city on earth where you could go. Everything is a step down. They have a view of New York as Mount Everest, and they're living at the top of it. And everything, if you were to say, have you ever considered moving to another city, they recoil in horror. You know, kind of like New York is like the Rome of 100 AD, and there's Rome, and then there's barbarians. Okay, so that's the character of the asset owner. What's the character of people that own Bitcoin? If everybody bought it because they intend to hold it forever, isn't that the kind of asset you want? Or if I told you people bought it because they liked the monogram, they own that dog. Well, how many dog coins are there? 48 or something? Well, if you bought the 47th dog coin, then the 49th dog coin is eventually going to demonetize you. So I think that's been very clear from the beginning. Bitcoin had the immaculate conception, right? I mean, you can't recreate this again. How do you have an open-sourced, asset that was never pre-mined, that was never ICO'd, that no one thought would be that until it became that, right? Yeah, beginning of May, basically. So I think that I think that my conviction grows with time, but it's pretty evident in August.
All right, so what's your no, I'm just
Do you have a price prediction?
It's going up forever.
All right, listen, I appreciate everyone coming. Thank you very much, Michael.
Yeah.
You've got a whole bunch of stuff you guys are spending your time on, so I appreciate you coming here, hanging out with us. And anyone who's got any questions, go tweet at Michael. He probably will not respond, but he'll at least read it. So see you guys tomorrow.
Have a good one. Thank you.
$6. We'll have to take a look at some Fibonacci expansion levels, but yeah, basically about $8. That's an expansion level from the all-time high back here in May all the way to the summer low. We have some expansion levels and with this accumulation. Hitting $8 maybe in the next couple of months, guys. I've seen these patterns, and it's absolutely crazy. Like I showed you. And I think this is potentially what could happen to Matic. Okay, a lot of people very bullish. So I think 2-3x is very, very possible.
Good morning, everyone. Welcome back to the Best Business Show. I'm super excited. Today we have a very special episode. Myself and Michael Saylor sitting down for a 2-hour in-person conversation. Michael and I recorded a podcast episode about a year ago, right after he announced that he was going to put a very material portion of his company's balance sheet into Bitcoin. And so maybe, Michael, we can start with kind of a 1-year update from when you actually decided to make that decision and how things have been going so far with MicroStrategy.
Let's take a look.
Sure.
Let's take a look at.
Well, if you roll the clock back to July, we had $500 million of capital in our treasury. We were holding short-dated treasury securities and generating effectively like 20 basis points of yield on it. We'd seen a K-shaped recovery. Wall Street came back with a vengeance. Main Street was flat on its back, and it was clear there's monetary inflation. So we decided that we were going to lose a large portion of the $500 million in purchasing power if we didn't do something. My forecast then was probably like 25% inflation, and you could have got there just by looking at the S&P index. So I thought, 500 million minus 25%, like losing $125 million in 12 months is kind of like losing money at 2 to 3x the rate that the 2,000 people in the company were making money. So we either needed to give the money back to the shareholders or we needed to invest it in something. So, the thought was, well, if we're a company, a Main Street company struggling against all the lockdowns with all the uncertainty, and we are doing it minus $500 million, it feels like a university giving up its endowment as it goes into a crisis, right? So that decapitalizing the company, it was a way to give the $500 million to shareholders. They would have put it in the S&P 500 and they would have got 34% on it if we had done that. But we would have, in essence, left ourselves defenseless without any capital. So that was one strategy. The second was invest it all. I would have bought 500 million worth of Bitcoin if I was a private company. I just would have walked out, bought all 500 million, and I would have done it at whatever, $10,000 a coin. But as a public company, you got to think about your outside shareholders. And you can't, it's not like there's 10. You can't just go to the 10 of them, ask them what they want to do and get their buy-in. When you're public, you've got a shifting set of outside shareholders that are changing every minute of the day when the stock market is open. So the way that you actually handle this is a bit more sophisticated. What we did is we transparently we telegraphed that we were looking at this. Our first press release was an announcement that we were going to buy back $250 million worth of our stock over the course of 12 months. And we were going to invest $250 million of our capital in hard assets. And we said, we're looking at everything under the sun, and Bitcoin was one of the things. So my first love of the Bitcoin community was, that the way that I knew I liked all the Bitcoiners was one day later, some cyber hornet, some Bitcoiner goes, MicroStrategy is considering buying Bitcoin with $250 million. Now, as Bitcoin merged in there with gold, silver, commodities, equity, property, real estate, anything you could have imagined. But the Bitcoin community immediately picked up on that. I don't know how they do that, right? They must be scanning for this. Nobody else picked up on it. The stock was trading $120 a share.
I think this is a
week goes by. Literally, you announce you're going to spend $250 million and buy your stock back. You think it would move? Nope. Crickets. But the market had a week of notice. And then a week later, we stepped it up into the next gear, which is, okay, we're going to buy $250 million worth of Bitcoin. We made the decision. We're not splitting it across 6 assets, right? And it's a good thing we did, right? Because Bitcoin's up 332% in 12 months. Gold is down 7%. If we'd split it 50-50, 125 million of gold, 125 million of Bitcoin, right, it would have cost us billions. If we'd gone all gold, it would have cost us many, many, many billions. We'll come back to that in a second. So we had to do something, but the question is what? So we just picked Bitcoin. We made the decision, but we thought, this is going to be jarring for some people. Stock is around 122 at the time. Right? To put this in perspective, the company's $500 million revenue generator, generating cash flow, and we have more than $500 million in cash and about 10 million shares. So the company's trading at 1 times revenue plus cash. Mm-hmm. We give back all the cash, the company trades at 1 times revenue, the stock goes to $60 a share. Right, so we're like 122, no one's really paying attention. But we said, well, maybe people think this is offensive, they're not going to like this, or it's too risky. How do you actually orange pill every one of your outside shareholders at the same time? Well, you can't. So the next best thing is we just offered to buy them out. So the idea is if you don't like this, we're going to buy you out. We're going to post $250 million to buy back shares at a premium. So we offered to do the buyback at up to $140 a share, which is, buyout premium. If you don't like it, then you sell your shares back to us at a profit. We wait 20 days. So the market trades for 20 days, and in the first week the market's trading on 135. Like people, so they're not even quite sure about the buyout. Then after a while they start thinking, they're like, well, if I can put it back to the company at 140, then presumably maybe it's worth more. So the stock trades up a bit past the 140. And at the end of the tender period, we have about $60 million worth of shares tendered. Everyone that didn't like the strategy had 20 days to sell into the open market. And if you sold in the open market above 140, then why wouldn't you? And if you're still holding the shares at the end of the tender period and you don't like the strategy, you sell into the tender. So the result of the Dutch auction is we had $175 million of extra capital. We thought about it. We put out another press release. Okay, this is our primary Treasury Reserve asset. So the first notch was this is a Treasury Reserve asset. The second step is this is the primary Treasury Reserve asset. Then we bought 175 million more Bitcoin. So at that point, we're up to 425 million. The first tranche is in the 11,500 range. That was a little bit difficult. It was more difficult to do the second tranche because Bitcoin traded down. We had a loss. It traded down to into the tens and even, you remember that. So the second tranche we bought at 10,000 something. Because we're committed, right? And if you go pull the Twitter stream, there's all sorts of interesting commentary on our strategy.
So you basically had done, let's call it up to that point, 425 million of a $500 million balance sheet. And you had rotated your shareholder base to people who were aligned with the strategy. And you had also planted the flag in the ground as the first publicly traded business in the United States to identify a treasury strategy that would leverage Bitcoin as the primary currency or the primary asset that you would use in your treasury. When you do all that, I know that there's been a whole bunch of conversations in the behind the curtain. I don't need names, but what are other fellow publicly traded companies, other finance executives, people on Wall Street at that point? Are they saying you're crazy? Are they, oh, wait, this is really interesting. Tell me more about it, trying to learn? Like, what was the reaction after the first $425 million?
I think it was largely ignored by every other publicly traded company. I don't think there's a lot of awareness to it. When we did our due diligence checks, we found Overstock 2 or 3 years ago had a few $1 million of Bitcoin on his balance sheet. And that's it, right? We couldn't find anybody else. And so this is off the beaten path, but it seemed like so rational to me. It seems so obvious. Bitcoin is digital gold. It's basically engineered to be digital gold. What do you need in a inflationary environment? You need something that's like gold but better than gold. You have to make a choice. It was obvious that the institutions were coming, right? I mean, you had companies like Fidelity getting into the space just 6 months earlier or whatever. But the fact that we're institutional custodians was a big checkbox. Grayscale was doing good business at that time, so it struck me as being a rational thing to do. But no other public companies had done it, and it wasn't. It wasn't totally clear to me why, although at this point now it becomes clear, right, in hindsight. So we went through that. We did the 425 million. The stock traded up. Bitcoin started trading up. At that point, I started speaking in public, and you were the first person I spoke to.
I remember.
Right? And I learned most of what I knew about Bitcoin by scouring the internet and looking at your podcast and reading all of the stuff that was posted, right? And I tripped through all these different things. And one thing I knew from your podcast was you always ask a question, right? At the end, right? You're like, you can ask me a question, remember?
Correct.
Now you get to ask me the one question. So what I remembered about Pomp was he wants to know a book and he wants a question, or he gives me a question. So I'm like, gosh, what question am I going to ask Pomp? And, how do you learn Bitcoin? You study Twitter and you study YouTube and you surf the web. So here's what I know. I know I get to ask you a question, and I know Jack Dorsey has Bitcoin in his bio. So the question is, how do we get Jack Dorsey to buy Bitcoin next?
Correct.
Right?
Correct.
And at that point, we're all alone as a publicly traded company, and people aren't quite sure if we're crazy. But what happens next is some bullish things, right? I mean, I thought that when Square bought Bitcoin, that was a seminal event, right? Because one data point is a question mark, but when you had the second data point, you can draw a line.
Mm-hmm.
And so that was a big day. When PayPal announced support for Bitcoin and they started moving it, that was a big day. That was a data point, right? Those were the data points that moved us from 10,000 to 12,000 a coin. And at some point, some Citron research studied, discovered my stock, and Andrew left, I guess, said something positive, and the stock started trading up, and then it traded into the high 100s, and then it traded into the 200s, and Bitcoin started trading up, and when we got into the teens, people thought, oh, well, there's something interesting here. So the next step in our journey was, like, in addition to me starting to communicate why we had done what we'd done, the next step in the journey was to go out and buy more Bitcoin. So we started buying more Bitcoin as part of the Treasury Reserve strategy, and that got people's attention. Then when the stock got to the 300 range, that was the highest it's been in a decade. 300. So we started thinking, well, maybe we can raise more money. And so we went back to the convert market, and we were trying to raise $400 million in a convertible debt offering, but it was extremely popular and we were oversubscribed. So we upsized the deal to $650 million. So that was a screaming home run. We had proposed a 32 to 37% premium. We priced it at a 37.5% premium, the high end of the spread. We'd proposed like 1.25% to 0.75% interest. We priced at the low end of the interest rate. So we raised $650 million at 75 basis points with a strike price of $398. The stock had not traded at $398 in a decade. Mm-hmm. So it seemed like reasonable. If you could sell $650 million of stock at $398 a share, it seemed like a reasonable thing to do at the time. So then we took that and we bought Bitcoin with that. So that was, we started out with we're going to raise the money for general corporate purposes, and along the way, the discussion was, what are you going to do with it? And I said, well, I want to be able to buy Bitcoin with it. And they said, well, we should put that, into the disclosure. I said, yeah, we should disclose that. And then they said, well, are you sure you're going to buy it? And I said, yeah. So eventually it flipped and it became, we're doing it to buy the Bitcoin. So that became, in the history of first, right? We're the first public company to buy Bitcoin on the balance sheet. We're the first public company to declare it a Treasury Reserve asset. We became the first public company to do a Dutch auction, which is in essence like an equity issuance to buy Bitcoin, right? It's like I'm either buying my equity back or I'm or issuing the equity. So the first Dutch auction, where the proceeds eventually became Bitcoin. Then the first convertible bond to buy Bitcoin. And I think that all of those things rotated the shareholder base, right? I think the most important thing was to be long Bitcoin, right? So in essence, the first publicly traded company where the shareholder base is long Bitcoin. And it started out, my aspiration was, it'd be great if half of our enterprise value is based upon enterprise software and half is based upon the assets. Because before we did this, we got substantially no credit for the assets. Mm-hmm. Like people were basically taking the $500 million and they're like, okay, well, that's going to be worth zero. right, or negative.
Because you were 1 times revenue plus just the cash on the balance sheet.
Yeah. Yeah. So if you've got a low growth cash cow, right, that's like being a dentist where you're going to make a lot of money every year for a decade, and maybe you'll make 5% more each year for a decade. If you've got a low growth cash cow, but the money supply is debasing at 25% a year,
Kills you.
right? It's like the road to serfdom is working exponentially harder for a currency getting exponentially weaker. What I saw was 2,000 people doing 100,000 things right every year to make $50 million, and then watching the enterprise lose $100 million a year due to a political decision. So in essence, we're running as hard as we can. We're falling backwards. And the situation was literally hopeless, right? Like people wonder, where did the Bitcoiners' hope come from? Well, it just was hopeless, right? I mean, the operating business is hopeless, and you know, okay, you know you're going to work yourself to death for a decade and do a million things right with 2,000 people, and you're going to be worse off in a decade than you are today. Okay, that's operationally hopeless, right? And then on the balance sheet, if somebody says we're not even thinking about raising interest rates, it means for the next 4 years you're going to get 0% on your money, and is going to be worth half as much in 36 months as it is worth today. The balance sheet is hopeless.
And this is all before we even see the persistently high inflation that we're seeing now, right? This was just from a market structure standpoint of this had been going on pre-COVID, got accelerated during COVID. You started to recognize this again last year. If you go back and you look at the inflation numbers in Q3, Q4, I mean, it was obvious that we were increasing or accelerating, but we weren't at 5% CPI for 3, 4, 5 months, right? Now is a much, much different situation. So at what point do you switch from this as purely a defensive, like treasury strategy of we want to take the cash on our balance sheet and put it in an asset that we can protect ourselves, protect our purchasing power, to then it feels like you made the switch to go offensive. That first bond offering was an offensive move.
I think you called it right there. I think that it's a defensive strategy through the Dutch auction. We had to do the Dutch auction to provide a graceful transition for our shareholders to get long Bitcoin. Right? You're either long Bitcoin or you're selling out to us at a premium, one or the other. And then from that point, Bitcoin started moving up and our stocks started moving up. And then we realized that like the conservative thing to do is just stop there. And if we'd stopped there, I mean, we would be all equity, $475 million invested at $11,000 a coin or something. And that's not a bad result, right? We would have made 6x our money. But what we realized is we could borrow money at 75 basis points. And you know, Bitcoin's up 171% a year every year for a decade, right? If you can borrow money at 1% and invest it at 171%, your arbitrage is 170% on how much? Well, how much do you want, right? Like, where are you going to stop that?
When you borrowed at the 75 basis points, I was impressed, but then you followed it up and you borrowed even more at a 0% interest rate, if I remember correctly. What was the second offering?
Because the first offering came out, the strike was 398. Bitcoin kept moving up. Our stock kept moving up. Eventually, that bond was the best performing bond of the entire year. Right, Anthony? What I'm saying is of every single corporate bond sold in the year 2020, every convert, every junk bond, everything sold, every municipal bond, whatever you could imagine, the single best performing bond was MicroStrategy convertible bond, where you could have doubled your money. You know, at some point it was trading insane amounts, like triple, you know, your money on a bond. Okay, so we had good success there, and of course Bitcoin kept moving up, and our stock kept moving up, and we realized by February that we could do another offering. The next offering was we came in the market offering $600 million. The first one we started with $400 million. This time we started with $600 million. But again, it was oversubscribed. We upsized it, exercised the green shoe. It became a $1,050 million offering. And the range was 50 basis points to 0. So we struck it at 0. And up 50, 37, I forget the number, but we ended up having a 50% premium or 47%. I forget exactly. It was a high premium. It was low coupon. The strike price is $1,432 a share. So now put this in perspective. This is 10 times the price of the Dutch auction, some number of months earlier. Now, so why'd we do that? Well, because if you could borrow $1 billion at 0% interest and invest it in something going up 170% a year,
pretty good trade.
Why wouldn't you do it, right? Like every single business on earth that's debt financed presumably is borrowing money to invest in something which is going to return a higher yield than the cost of the debt. Now, I want to pause here and make one point. The reason that I was sensitive to inflation was I immediately saw the inflation in March and April in the stock market, right? Because my inflation bogey wasn't, if I were to go to all my investors and say, I got $500 million, I'm investing it at 2% interest and inflation rate's 1%, they wouldn't have given me a pat on the back. They would have said, the S&P index is moving up 10% a year. Your hurdle rate, your cost of capital is not 1% or 2%, it's 10%. And maybe you're getting 5% yield on a piece of debt, then I don't know, hold my nose, but you're losing 5% a year. Half-life of the money is 12 years. Okay, fine, but like you shouldn't be holding it. You should be buying your stock back or buying another company with that. Sitting on that cash it doesn't make any sense. Safedine says the dollar-weighted monetary inflation rate across all currencies for the last 30 years is 14%. Interesting number he comes up with. 14% is the inflation rate of the currencies. Now, that would be the inflation rate on scarce desirable assets or any portfolio of assets. And if I look at my screen right now, over the last 10 years, the S&P 500 is showing 14.15% interest, or 14.15% compounded annual growth rate. NASDAQ's up, 19%, gold is up 20 basis points, nothing. Bitcoin's up 170%, right? And long bonds give you like 2.5%. So the monetary inflation rate equals the S&P index. Well, the traditional way you'd value a stock is you would put a risk premium on it, and you would say, well, your cost of capital is the return plus the risk premium. So it used to be we'd think, well, there's a 3% risk premium, and the inflation rate then would be 11%. But I think that if you buy the S&P index, you're kind of, in theory, stripping out the risk because you're buying 500 companies. So the S&P index can be viewed as a proxy for monetary inflation. And the question of inflation is, what's your inflation rate? Well, what do you need to buy? If you're a consumer, then your inflation rate might be CPI if you agree to buy what the Federal Reserve tells you should want. Right? And the market basket of things in the CPI is what the government says you should want in your life. But they never included a Picasso or a jet or a yacht or a house in Miami Beach in that market basket.
A step even further than that is the number 14% is very interesting because my understanding is if you go back, obviously CPI used to represent a cost of goods index. So what is literally the change of price of individual goods year over year over year, and that's how inflation was measured. Now, obviously, we have a cost of living index, which is what you're talking about in terms of, well, here's the things that we think you should want. Here's the general weightings of these specific assets or consumables inside of this basket, and then that's kind of our moving target for this measurement of inflation. But if you were to go back and look at the cost of goods index based on how it used to be calculated for CPI and apply it to today's numbers, you get about 14%. And so not only is the S&P, not only is that monetary inflation, but also that cost of goods index based on the original calculation of inflation is around 14% as well, which is, there's coincidences in life, but it seems to keep coming back to somewhere in that kind of mid-teen number when we're trying to understand what is that inflation.
Yeah, isn't it interesting? The hedonic adjustments kill you. But on the other hand, and I say this oftentimes, inflation is a vector, and what I mean is you got to use multi-dimensional arrays and linear algebra to even start n-dimensional linear algebra to even start to deal with the issue. Another way to say it is you can calculate a different inflation rate for any person in any jurisdiction based upon their mix of products, services, and assets they want to acquire. And so common sense says a person that wants to acquire a set of manufactured goods and wants to watch streaming YouTube has a lower inflation rate than someone that wants to buy Picassos. Now, what if you want to be rich? If you want to be rich, your inflation rate is very high because you have to acquire assets. If you want to be middle class, your inflation rate is different. So back to why I did what I did. If you're the CEO of a publicly traded company, your inflation rate is the cost of capital. And the cost of capital, because your shareholders hold you to that cost of capital. If I go to a public investor and I tell them my goal is 2%, and they're saying, well, the S&P is up 14%, then I'm undershooting their goal. Their index is the S&P index, right? So the inflation rate for an investor is the index. Now, of course, different investors have different indexes. If you go back to the strategy, if you're a fixed income investor, you've got like a sovereign, or corporate fixed income rate. You've got the junk bond index, you've got the corporate, investment grade index, you've got the sovereign debt index. You have capital structures in the world that have different indexes. Someone that wants to send their kids to an Ivy League school and wants to have a house in the Hamptons, right? They have a different index. Someone that wants to be obscenely wealthy has a different index, right? So that's why you could have everybody talking past each other because and of course, if you keep changing the indexes, the S&P 500 index changes, right? They rebalance it. The PCI, the PCE indexes, they get rebalanced. So the indexes are changing. And if you allow someone else to feed you the index they want you to focus on, well, you can see it right now, right? The official inflation rate in Canada is 4%, but the housing price is up 15%. The official inflation rate in the U.S. is 5%, but the Case-Shiller index is up 27%.
Something big.
Okay, and of course, it all comes down to deciding what you want in life. Now, in the last 12 months, the S&P is up 34%. If you're sitting on $100 billion worth of cash and you put it in the S&P index, you got $34 billion back. You have $134 billion right now. If you held it in conventional treasuries, you're short $34 billion. If you convince yourself that the inflation rate was 5%, or if you convince yourself that you could say, look, my treasury index is just the short-dated sovereign debt index. And so as long as I'm beating the 20 basis points, I'm good. And by the way, like, if I have a bunch of money sitting in a bank, my bankers come to me. I've literally had bankers from the big wire houses. They came to me when I'm sitting on $100 million or $200 million in cash, and they go, we can get you into one of our money market funds that'll yield 22 basis points, and that's much better than the 9 basis points. And they're selling this to me. There are people in suits that make a lot of money, and they're selling it to me. And you read the prospectus, and the prospectus is they're going to do something, and they're going to charge you a 27 basis point fee to generate 22 basis point yield to you. You're literally...
They're making more money than you are.
You're giving 60% of the yield to someone in a suit that's giving you a service to get you 5 basis points more. But there are people that convince themselves that this is a good idea, right? we come back to that in a second. It's an important truism in the market. Why is it that everybody hasn't bought Bitcoin? People ask that, right? All the Bitcoiners wonder, why don't all these investors buy Bitcoin? And the answer is because there's trillions of dollars of capital locked up in capital structures that are chasing a different index. Right? There's trillions of dollars of money sitting with people that think that inflation is CPI. There's trillions of dollars sitting in real estate funds, and they're trying to beat CPI. If I got rents and I'm raising them at the CPI rate and I'm happy with it. There's trillions of dollars invested in fixed income funds where they have to beat the junk bond index or beat the corporate index or beat the sovereign index. And if they beat the sovereign index, if I have $20 billion and all I got to do is beat, the junk bond index or I get paid, then I'm getting paid to invest $20 billion to get 50 basis points more.
What happens to those people? Let's say that inflation isn't 5.1% or 5.4%, wherever it comes in on a monthly basis now. And we all agree it's something that is higher, but there's disagreement on how much higher. Is it 6% or is it 14% in terms of the actual inflation number? What happens to all the people who are using CPI as the benchmark? Do they just succumb to the inflation over time and continue to lose money until they wake up or something else?
I think a lot of people have a hybrid situation. Like, for example, let's say I run a real estate trust or I run a real estate company and I have $100 million a year worth of rental income. It's capped at CPI. The leases are signed 10 years, 20 years, 30 years duration, 5 years duration, and then you've got all the trade relationships. Like I can't go to the people that rent my building and tell them that the inflation rate's 14%. Right? I mean, would you pay a 14% increase in your rent here? No. So there's a certain inertia in parts of the economy where they're going to move up at CPI, or they're going to be flat, or maybe they can do double CPI. But at the same time, maybe you're the person running that real estate company. You're thinking, well, I'm going to take my cash flows and I'm going to invest them in. Would you invest them in a stock that you thought would go up at CPI? Or would you invest them in the S&P index if you thought you would get CPI? Not really. Yeah. So what you have is you have people that are sweeping their cash flows from an operating business that's low growth, and they're putting in the S&P index.
They're looking for the growth to come from the investment.
Okay, the S&P is up 34%. How many companies in the world generated 34% more cash flow or raised their prices by 34% or grew their revenues 34% in the last 12 months? Not many, right? 98%, 99%, they're in a fiat operating system where they're going to raise their prices or generate cash flows at a rate slower than the rate of monetary inflation. But those same people will turn around and they'll buy Bitcoin, or they'll buy property, or that you may buy property that is going up faster, right? There's not a single commercial rent, there's not a single commercial lease, I think, in the world where they raised the price of the rent 27% in the last 12 months, right? At least I can't imagine if you had a lease, no one's got it capped at the Case-Shiller index. So on one hand, residential property or other types of property could actually be accreting at a much higher rate while your rents don't accrete at a higher rate. So you're taking duration risk. So I guess the more important point is there's a lot of capital. When we think about capital structure, it's like $500 trillion to $900 trillion of capital floating around there. It's locked up in structures. Some of it is in currencies, and it can move rapidly. Some of it is invested in companies that can't, right, move rapidly. Some of it is tied up in equity. Some of it is tied up in debt. Some of it's tied up in a trust. I have a trust. My trust gave $10 million to a financial advisor or to a company whose strategy is investing in mid-duration corporate debt. And every year I review their performance versus their index. And over the course of a decade, I might start to shift small amounts out. But I think that the capital is structured in such a way, there's enough inertia in the system that it could take 30 years for the capital to get reallocated. We're waging a war on the 60-40 porportfolio, right? How long will it take before people allocate that as 65-35 or 70-30, right? It takes a long time. There are people still invested in gold. You and I joke about that. Gold's been failing for 12 years or something like that, right? Gold's the same price as it was when Bitcoin was invented, and yet an aggressive move would be a macro investor allocating from 50% gold to 45% gold and 5% Bitcoin, and that's a year's work.
Yeah. Let me ask this question. Retail investors or individuals, I think over the last 12 years or so, took Bitcoin, and as a generalized group, it went from a contrarian idea or contrarian trade to a consensus trade. There's now 100 plus million people around the world that have decided, hey, this is good enough for me to go ahead and store some of my value or economic wealth here. And so you can argue that contrarianism became more of a consensus. We now, over the last maybe 18 months, have seen in the financial or institutional finance world more people jumping into the game. And so definitely some shift from pure contrarianism to now a little bit more of a consensus. Everyone has to have some sort of Bitcoin strategy. You can't simply just say, oh, it's just for drug dealers, it's just for criminals. You at least have to have had a conversation now, because Fidelity, Paul Tudor Jones, Stanley Druckenmiller, many others have all now started to participate. What does it take for public companies, where I basically break down, there's two groups, right? There's yourself, Tesla, and Square as the three major publicly traded businesses that are multi-billion-dollar companies that have pursued a treasury strategy that includes Bitcoin. And then there are all of the publicly traded crypto-native companies, whether they're miners, whether they're places like Coinbase, et cetera. It's still contrarian in the public markets to have Bitcoin on your balance sheet. What does it take to get the shift that we've seen in those other two cohorts to now get it to a consensus type, movement or idea?
I think there's some, you could check off catalysts that are impediments that will become accelerators. First of all, regulatory clarity, right? If you're seeing support for, let's start with the most basic issue. Is Bitcoin an asset or a currency? Okay, the word cryptocurrency is a very politically charged word, because if Bitcoin was a currency, it's in opposition to the US dollar. Okay, and if it's an asset, it's in opposition to gold. Okay, so just resolving the fact it's a digital asset, not a digital currency. Most people, how many public speakers, how many well-regarded investors have made negative comments about Bitcoin over the past 12 months because they mistakenly think it's a currency and they think they're sticking up for the dollar. Many. Like, I prefer the dollar. So if you understand it's a digital asset, a scarce store of value, speculative digital asset, that's how politically correct people would refer to it, right? And anybody else would say it's just a digital asset or a store of value asset. The first impediment is just understanding that and educating the market that it's a digital asset. I think the second impediment is getting over the issue of is it a threat to the powers that be and will it be banned? So first, what is it? It's an asset. Second, will it be banned? Okay, well, no, we're not going to ban cryptocurrency. We're not going to ban Bitcoin. It's going to be around here. So those two checkboxes are huge. I think the third checkbox is, can I actually buy it via my existing bank? Every publicly traded company has been doing business with probably the same bank for 30 years, Paul. Some have been doing business with the same bank for 50 years. Some for 100 years. Okay, if you trace it. To have adopted a new banking relationship is not a one-in-a-decade thing. Public companies don't change in a decade, right? So if I could buy this directly through Bank of America or JP Morgan or Citigroup, et cetera, I think that makes a big difference. If I have to go to an institutional grade Bitcoin exchange, that's a 1 year exercise in due diligence.
Right? There's friction to doing it.
There's two issues, right? One is before you give $1 billion to a counterparty, you have to inspect their accountants, their legal teams, their licensing, their executive team. Would you give $1 billion to a private company that's new, right? It's like, that's a huge hurdle. And the second is they're not FDIC insured, right? They're not. The imprimatur being backed by the U.S. government means that, in any liquidity crisis, the Federal Reserve gives you $10 billion or $100 billion. How much money did you need, right? And that's what the big licensed banks have. And, the last holdout that wasn't doing that was Goldman Sachs. In the great financial crisis, they broke down and they became a bank, right? And it matters. So if you want to move huge sums of capital, right, at the point that some of the major banks handle the asset, that makes a big difference because it checks a lot of boxes and people are pretty conservative about that. I think the next hurdle is accounting.
Explain what this problem is, because I don't think a lot of people understand how big of a problem this is.
Yeah.
Check out Bitcoin Center's website. We've got the latest.
It's a source of massive inertia because every publicly traded company is running on GAAP accounting, and so we're publishing our GAAP balance sheet and our P&L every quarter. And investors are reading the P&L, and the whole point of GAAP accounting is, in theory, I ought to be able, at a glance, in 30 seconds, look at your balance sheet and know how much capital you have, and in 15 seconds, look at your P&L and know whether or not the business is well run. And when the GAAP accounting aligns with the underlying business, then you can do that. But when it gets out of alignment, then you have to adjust it with pro forma accounting, non-GAAP accounting, or adjusted accounting. And when you get to adjusted accounting, it goes from being a 30-second inspection to a 30-minute thing. And you know how difficult it is to communicate a 30-minute concept to the world? Very, very challenging. So the issue right now, and the issue when we got into Bitcoin is no publicly traded company held any material Bitcoin. So the accounting treatment was probably appropriately conservative. The most conservative accounting treatment you could imagine is indefinite intangible. And what indefinite intangible accounting means is you buy something, you test it against the market continually, you take the lowest bid, and you mark the value of the asset down to the lowest bid at any point in the history of your ownership. And you treat that not as an investment, but you treat that as a loss in the core business, the operating business. So if you have a business that makes $100 million a year, and it's run perfectly, with a perfect pegged 20% operating margin, right? If you buy Bitcoin and Bitcoin trades down for 1 hour and trades back up again, you might have $100 million operating loss. And then you would be showing the business made no money this year on a GAAP basis. So now you're an outside investor and you're staring, you're saying, what happened to the software business? It looks like the operation got wrecked. If I made 1 million decisions poorly, I probably couldn't go from 100 million in cash flow to zero, right? Or if I did, it'd be challenging. Or on a Saturday night, someone could flash crash something and you would have $100 million loss showing on the operating statement. So indefinite intangible means you take the volatility as an operating loss on your P&L and you take the theoretical worst case. The theoretical worst case would be I buy Bitcoin and I wait for the lowest price ever and I sell it all. Okay. That you take the theoretical worst case and you represent that as the status. So when you print your quarterly results or you print your annual results, you want a simple example. You buy $1 billion of Bitcoin, it trades down to 500 million. then it increases to 1 billion, then it increases by a factor of 10 to 10 billion. If that's the fact pattern, when you close your books under indefinite intangible, your books say you have $500 million of assets, and it says that you lost $500 million in the operating business, and the money's gone. That's what GAAP accounting says.
Mm-hmm.
In actuality, you might have a statement that says you have $10 billion of assets, and it looks to the casual observer like you generated a $9 billion investment gain.
Mm-hmm.
So you can now, how do you fix it? Pro forma adjusted accounting. You have to create a schedule, a reconciliation. But now, what have you done? You've just made first of all, you've made the investor's job 100 times harder. And investors got to read all the pro formas, think about it, and and then they've got to reverse it out and figure out what really happened in the rest of the business, right? And then they've got to figure out what's your balance sheet really look like. And then the second problem you have is your statements become non-comparable over time. Like, for example, I can't, if I look at my balance sheet on a GAAP basis today versus a year ago, right? Bitcoin could go up by a factor of 100. The balance sheet doesn't change. So when you're comparing quarter versus quarter, there's no information there because you're suppressing it, right?
Yeah.
And then if two companies have Bitcoin, one company has 100,000 coin and one company has 10,000 coin, and Bitcoin goes up by a factor of 10, neither company shows an investment gain, neither company shows a balance sheet adjustment. And so how do you compare one company to the other company if you're trying to make a rational investment decision? So things become non-comparable across securities, and they become non-comparable across time. And you're invited as an investor to create your own set of pro forma systems to compare it yourself, which is like 1,000 times harder. So that's an impediment for a public company or for a company that relies upon GAAP accounting. But here's where it's really an impediment. Like, why can MicroStrategy do it? Well, because we rotated our shareholder base to be long Bitcoin, and because, fortunately enough, we were able to build a substantial Bitcoin position. So now, if you know that MicroStrategy has 14,000.
80% altcoins is my portfolio.
114,000 Bitcoin.
Yeah, if I have 114,000 Bitcoin and 114,042 Bitcoin. All you have to know about MicroStrategy is take 114,000 and you multiply by the price, and you know that we've got that much. But let's say that you were Google, or you were Apple, or you were Facebook. Well, you've got all these other businesses, or Amazon, and now you're trying to decompose the businesses. And if they buy a big Bitcoin position, then what looks like a pristine P&L, everybody debates, is Apple's gross margin going to be 38% or 38.5% this quarter? And that's a big deal, right? I mean, there are people who take victory laps on getting within 1% of the gross margin. Well, your gross margins would totally all your margins get blown out of the water from the volatility, the accounting volatility of the Bitcoin. So
how do we solve it? What is the change that needs to be made where you would say, okay, the system we have right now is an issue and it's an impediment. If we move to X, that's the solution in your opinion?
Yeah, well, so I joke with people, right? Like, you'd be better off buying baseball cards or art or just about anything than buying Bitcoin from an accounting point of view, because if you were to if I went and bought sculpture or, some random anything, normally the test would be like once a year, you check to see if the asset's been impaired. But checking to see if an asset's impaired occasionally is much better than checking to see if the asset's impaired every minute of the day, right? So there are different types of accounting treatments, but if you were to buy $1 billion worth of a security, like an ETF, like one immediate fix is you buy $1 billion worth of a Bitcoin ETF. It's not property anymore, it's a security. If you're owning a security, generally accounting says you value securities based on fair market value or fair value accounting. So that means that if it doubles, you would show an investment gain. This is the Warren Buffett's accounting for Coca-Cola stock or for Apple, right? So fair value accounting is applied to securities. Fair value accounting is applied to certain other things. If the accounting goes from indefinite intangible to fair value, in that case, then you would be showing the $10 billion of Bitcoin as an asset on your balance sheet. And then you would show the gain or loss as an investment, what they call below the line adjustment. Like on a quarter where it's up $2 billion, you would have a $2 billion investment gain. And a quarter where it's down $500 million, you'd have a $500 million investment loss. And that provides more clarity. It's kind of a benefit to investors because an investor can separate the gain and the loss from investment activity from the gain and the loss from operating activity, right? And that helps you to figure out, is the core business healthy? And if Warren Buffett prints like $3 a share or some large amount of EPS, I want to decompose it into how much of it was from the stock portfolio versus how much of it was from the operating businesses, right? And then I can extrapolate out rationally. So ultimately, I think fair value accounting is the solution to allow public companies to hold this in large quantity. This is why, say, even a Tesla or Square would buy not 100% of their balance sheet or 50%, but 5%.
Yeah.
If it's 5% or 1% or 2%, it's not going to be material to the rest of the P&L and the rest of the balance sheet treatment. When it becomes 50%, the volatility from the accounting treatment will optically impair transparency against the P&L and the rest.
So when I look at the public companies right now, let's put aside the kind of Bitcoin or crypto native companies, the miners and Coinbase, etc. There's basically three publicly traded CEOs that are orange pilled, right? Yourself, Jack Dorsey, Elon Musk. Those seem to be the ones who have purchased Bitcoin, who have talked about it publicly, who appear to understand the ethos of it and kind of why it's important for their businesses. Is this something where we are literally going to see one by one, each individual CEO is going to have to get orange pilled and eventually make this decision? Or is there some milestone or like inflection point where you say when X occurs, we will then see, on a quarter by quarter basis, tens of publicly traded companies or hundreds of publicly traded companies all going ahead and doing this?
Okay, well, first I would say it's not just the three. There's probably 36, but every Bitcoin miner is holding Bitcoin on his balance sheet. And one of the major things, one of the catalysts that's taken place in the last 12 months is all the Bitcoin miners coming public, and all of the miners that were public on international stock exchanges shifting over to the NASDAQ and the New York Stock Exchange, right?
Correct.
So Marathon and Riot. And actually, if you look at it right now, Marathon has got a Bitcoin exposure. I wonder when Silvergate Bank will, right, or how that'll work. But Silvergate's obviously a Bitcoin company. Coinbase has got Bitcoin on its balance sheet, right? You've got Bitfarms, Hut 8, you've got Sphere, you've got Bit Digital, you've got Galaxy, you've got...
Well, there's a bunch of businesses that come out of the industry,
Argo.
and I think we're going to see more and more go public. So let's say that number doubles or triples of like the publicly traded companies that come out of the Bitcoin and crypto industry, because you're just going to get a bunch of startups that continue to grow and eventually go public, whether it's direct listings, IPOs, or SPACs. That number will just grow.
And I think there's a dozen other companies that are public that are holding it in their treasury at a smaller amount. So what are the catalysts? I mean, clearly, one thing that's already happening, right, is the regulatory clarity that's coming. The more clarity, if the regulators move forward and they clarify the treatment of stable coins and security tokens and DeFi exchanges, I feel like the connection of Bitcoin to crypto has been holding it back, right? Because stablecoin regulation is unclear. Many cryptos are security tokens. That's holding us back. The exchanges that are trading Bitcoin while they're trading security tokens, right? The connection of Bitcoin to SHIB or Dogecoin, right? This holds back a public entity from wanting to get into that space. I mean, in fact, it's really the express concern that the SEC has about approving a Bitcoin spot ETF, right? Which is they're concerned about the markets where Bitcoin is trading, right? And they're concerned probably about what's Bitcoin volatility coming from? It's coming from the cross-collateralization of crypto markets with high leverage, trading at off hours, right, against thin liquidity pools of other security tokens. Right, and so
we are going to get a reaction at that range.
As that clarity comes with regard to the entire crypto ecosystem, it's going to decrease volatility and it's going to increase confidence of large public investors and large public companies. That'll be part. I think if we get clarity from FASB or any kind of improvement in the accounting situation. That's a plus, and there's a groundswell of interest, right? There were 515 letters sent to FASB on this subject, and there was a lot of commentary from regulators, from we've got congressmen, we've got senators, we've got auditors, we've got big institutional investors, we've got big publicly traded companies, and they're all opining on the issue. So, and I have yet to see anybody. I haven't seen any articulation by anyone suggesting that the current accounting treatment is beneficial.
Yeah, no, I think that's fair.
So it's broad-based consensus that it's time to take a look at this again. So I think that accounting is important. I think that we just see the barriers with the banks getting knocked down, right? Like at the point that you saw the commentary by the chair of the FDIC, where she said we're looking for ways to allow banks to hold Bitcoin on their balance sheets. Right? If FDIC,
this major resistance,
it used to be we dreamed. Our dream was one day big banks may actually own Bitcoin. Or what if all the big banks own Bitcoin? But now I think we flipped to another observation, and this is an interesting one. In that stablecoin working group paper that was released last week, not only did they say it's okay for FDIC-approved banks to hold stablecoins, they actually said it's required to be an FDIC-insured bank to hold a stablecoin. Okay, so we're actually growing up as a crypto industry. We're going from unlicensed, non-institutional grade corporations that are primarily entrepreneurial and fast-moving to licensed, institutional, regulated entities. And if you look at that, isn't the conclusion that the next step, I see as a green light, JP Morgan, Citigroup, Bank of America are going to issue $1 trillion worth of stablecoins? I mean, it's an invitation, like it's a green light to every single bank in the world, right? If you're Silvergate or anybody that's in the crypto industry now, right? This is kind of a message. I don't think it's that much longer, right? If you can hold a stable coin as a digital asset, it's not that much longer before you hold Bitcoin as a digital asset. And if the FDIC is saying we need to find a way for banks to be able to hold this, and if the president's working group is saying you need to be a bank in order to hold the stable coin, then I think that sometime in the next 12 months, we actually start to see large banks getting in the business.
Is this good or bad? The financialization of Bitcoin, let's talk about, and then there's obviously all of these other technologies and assets. But I think that there's a group that would argue the more that the asset becomes financialized, the more that it gets not just accepted by the licensed organizations, but you see legislation or directives that say you have to be FDIC insured in order to interface with this stuff. They look at that as negative. There's other people who look at it as a positive. So how do you think about the pros and cons of what I'll just call like the financialization of what were assets that many people were attracted to in the beginning because they weren't part of the existing system?
Very likely to break, or we either break now in the next coming days.
Bitcoin is decentralized and it's an asset, and it's already gone to 200 million places. And you might not like the people that own it, right? Don't they call it the money of enemies?
Yeah.
Right? The point is, Bitcoin's going to people who have politics that you disagree with. Right? It's almost certain. So it's spreading at such a rate. It's like fire and it's like electricity or mathematics, and you can have an opinion. Do you think it's good or bad for banks to have mathematics? It's like, we're the only ones with math. Is it good or bad for people to be able to read and write? It used to, there was a concern that we shouldn't let everybody read and write. It's just basic technology. It's spreading as fast as it can spread. The reason it's superior to gold is because I can snap my fingers and I can withdraw $1 billion of Bitcoin from the bank in 5 minutes.
Correct.
Okay? And the thing that's going to maintain its integrity is the fact that you can shift counterparties. You can move, if you can move $10 billion of an asset out of a jurisdiction, I can move it out of Miami, I can move it out of a bank, I can move it out of a country, I can move it out of a system. It's always going to have more integrity than the alternative. So coming back to this, it's like, okay, are you comfortable? There are a lot of people that don't think you should have a software wallet on an iPhone. You should have a hardware wallet, right? There are a lot of people that think that it's better if what if I don't want your family to have it because I don't like somebody in your family, right? What if I don't want your small company? You have a private company. Do you own some Bitcoin? Well, did you sell out? Now there's a company that's got other corporate interests that has some Bitcoin. A lot of people don't want a public company to have it. Why? Well, public companies have shareholders. Yeah, well, I don't want a country to have it, right? I mean, there are a lot of people that are concerned that El Salvador uses Bitcoin. Well, it might get hijacked by the politicians. What if Turkey actually starts buying Bitcoin? Do I like it? Do I not like it? But the point is, it doesn't matter what you think, right? It's not. It's like you sitting and saying, I'm really angry that someone else is using arithmetic other than me. Right? It's spreading like wildfire. It seems to me that the world's a better place if people have monetary integrity than if they don't have monetary integrity.
I agree.
Right? Right? And in this particular case, is this good? Yeah, of course it's good. Right? Why is it good? It's good because what we want to do is fix everything, not destroy everything, right? If you want to fix the bank, then they replace their bonds with Bitcoin and the capital structure of the bank is better. Do you want to fix every publicly traded company in the world? Do you want to fix the balance sheet of Apple and Google and Facebook and Amazon? If I tell you that they have to do the deal through an FDIC-insured bank, then you either can fix them, right? There are a lot of people that don't want to fix them. They don't want Apple or Google or Facebook to fix their balance sheet. They don't want them to fix their product. But on the other hand, I'm an optimist. What do I think? I think 8 billion people should be using Bitcoin as a digital asset. Now, there's two ways to do it, the easy way and the hard way. The hard way is topple every government in the universe, destroy every technology company, and create my own hardware wallet and my own decentralized. Let's rip back to the network, destroy every big tech platform, destroy every big company, and somehow let's build something totally new. That's the hard way. Seems pretty stressful to me. What's the easy way? The easy way is all the big banks start issuing stablecoin, a token called the US dollar, right? A US dollar stablecoin. And we go from $130 billion in stablecoins to $1 trillion of stablecoins to $10 trillion of stablecoins to $100 trillion of USD. And then 8 billion people have an iPhone or an Android phone with a wallet, and they do 10, 20, 50 transactions a day at the speed of light on the Lightning Network. On the Lightning Network, and that's the best, right? A decentralized, non-custodial network moving at the speed of light for free. Next best is they move these things around on the Android or the iMessage or the WhatsApp or the Facebook or layer 2 or layer 3 application, right? That's second best. And they do it without toppling every government on Earth, right? Like, I can't. There's 130 currencies that are floating right now. 130. How many do we need? Well, we certainly could get by the next step with 12, right? The CNY is not going away, and the USD is, unless you wish to topple the government of China and the government of the US and the governments of the Western world, which I don't think you want to do, right? You got bigger problems if you did, right? Like security and safety and food
there'd be
and
mass
water.
chaos, and it would be a very, very painful situation for everyone.
Yeah, right. Like so if you look at an optimistic view, let's just actually make the world a better place and a win-win for everybody.
So your thought process is this asset, which has that monetary integrity that you're talking about, it's fully transparent. It's in many cases, you can look at it as an automated central bank. Nobody controls it. It just sits there programmatically executing what the code says for it to do. That will serve as a global store of value. Other people will then choose to take their fiat currencies and upgrade the technology. It doesn't necessarily change their monetary policy, but they can then go ahead and digitize or tokenize the dollar, the euro, the yen, the yuan, whatever currency, and then they would basically use the Bitcoin network payment rails to have those assets fly around the world however people chose, but ultimately people would go back to and settle in Bitcoin as that global store of value?
Partially, but it's a more elaborate idea, which is my idea is we incrementally upgrade everything everywhere for everybody in the most peaceful, least painful, least jarring way. Right, so the incremental upgrade means we deploy to 8 billion people, to everybody on the planet. We deploy digital wallets. In the wallet, you have a set of currencies and a set of assets. And in that wallet in Argentina, you've got your peso and you've got your dollar as currencies. If you want to hold something for a day, you hold a peso. If you want to hold it for a month, you hold a dollar. If you want to hold it for a lifetime, you hold Bitcoin, right? You've got digital assets. Bitcoin is the strongest digital asset. Is it the only asset? No, because you've got a company. There are buildings. There's Apple. I still like Google. I want my YouTube. I like Netflix, right? We need Domino's Pizza. We need Bitcoin Pizza. Someone's got to manufacture the cameras that are staring at us right now. Got a microphone. We can't just have one asset. We have multiple assets. We have multiple currencies. Will all currencies survive? No. The weak ones, the ones that are truly defective, will go away. 66 countries are dollarized. There's 180 countries in the world. How many currencies do we really need? Right? Right now it's China and the USD, right? You might actually collapse down to 2, but more likely you'll have the yen and you'll have the euro and you'll have the dollar. Is there any currency in Africa that you really want to hold more than the dollar if you had the freedom of choice? Not really. What will you do though? You need the local currency for local payments, right? If there's a strong local government, you need the local currency to pay your tax bills because it's mandated by law. You need the global currency, and it's called the US, the global reserve digital currency, the global reserve currency. You need that as a medium of exchange. If you want to buy something in Argentina from someone in Brazil, or you want to buy something in Africa from someone in Venezuela, you're probably going to swap dollars, right? Why? Because there's 100 million companies, Pomp, that have invested 30 years to create accounting systems and point of sale systems to process billions and billions of transactions in those currencies. Like my company does it. I can actually swap my balance sheet to Bitcoin using 3 people, and I can do that in a matter of weeks. Swapping all of my vendor payments, all of my payroll, and all of my receivables into Bitcoin, that would be 1 billion times harder, okay? And it's not worth 1 billion times more stress and effort. It's just not worth it, right? It's in an inflationary environment, money decomposes into a currency layer, which is losing value hopefully slowly. If your currency lost value at 1% a month, but your asset gained value at 15, 20% a year, that's stable. Now, do we need to replace it? Not this decade. Right? I'm not going to speculate 30, 40, 50 years out, but I rather kind of feel like a more nuanced idea. Here's a nuanced idea. I want to build the 21st century economy on a strong foundation of integrity and trust and thermodynamic soundness and energy, pure energy. So that means the balance sheet, the foundation of every institution should be built on Bitcoin. But every institution has its own derivative, its own security from Bitcoin. So when you create your company, if you want to take your company public, you should be able to issue stocks and stock options backed by Bitcoin. I'm not denying that. If Turkey goes and they buys billions of dollars of Bitcoin, they can keep the currency. They would be backing the currency with a hard asset. How many institutions are there in the world that need some control? Like maybe if I said to you, you can't issue stock in a company, is that good for the economy? Not really. If I said no country can print its own currency, is that good? Probably not really, right? Because the politicians need some power over the currency. Right? I mean, unless you come up with a way to generate all the food and all the products that we need without companies and without countries, like when you figure that out, that's like a utopian idea, then maybe you can live with Bitcoin only and the like. But in the meantime, which is like, let's just focus on the next decade, because there's no point in solving this problem after the year 2030, right?
Yeah.
Right? Focus on the next decade. The next decade, it works like this. All the big banks issue USD stablecoins. What happens? The US dollar replaces all the weak currencies, and it grows in strength, right? The US dollar can become the daily currency of 6 billion people.
And it has been doing that for some time. You mentioned the dollarized countries.
Right now, analog dollars in the 20th century banking system is the reserve currency of the world, but it's an awful, inefficient system, right? Yeah. How do you send $100 to someone on Saturday afternoon if they live in Africa, if you live in South America? Send someone to a friend of yours in Paris on a Tuesday. I dare you, right? So the point right now is the U.S. dollar is the world's reserve currency, but it's running on 20th century rails. So the U.S. dollar should evolve to run on crypto rails. It should run on, we can debate, right? Lightning rails, what's up rails, any other crypto, right? Interesting question, but what we can't debate, which is 100% certain, is everybody wants to be able to move the money at the speed of light and program it on a computer chip on a Saturday afternoon. Sometimes we get in this confrontational state where people think, well, it's Bitcoin versus the Fed or Bitcoin versus the dollar. It's not, right? We can all win. Right? It's a win-win here. It's in the best interest of the dollar to move at the speed of light and be programmable. And there's 100 million businesses that want to do business in the dollar. And I am the controlling shareholder of MicroStrategy. I founded the company. I mean, there aren't that many CEOs that have more power than me. If I walked into a room and I ordered everybody in my finance team to convert over all the accounting systems and stop and sell everything in satoshis, right, and pay everybody in satoshis.
Slightly bearish
You know,
on Bitcoin.
you understand that if everybody didn't quit on the spot, it would be a decade and $1 billion of work. And it wouldn't work. And by the time I finished the $1 billion of work, the company operation would go to zero. Right? It's literally a death sentence for a big institution to attempt to convert over its mediums of exchange and its accounting systems for routine transactions.
So right now, really, the value is to get Bitcoin onto the balance sheet as a store of value, protect shareholder value that's sitting there, continue to operate your businesses. And my understanding of what MicroStrategy is doing is you basically have articulated and highlighted two separate strategies. We have a software business that we're going to continue to try to grow, drive cash flow, and serve our customers from a business intelligence standpoint. And then we have a treasury strategy, which is we're going to use Bitcoin to protect our purchasing power and our assets that are actually sitting on the balance sheet. And those two strategies combined make up the business. And obviously the market has found it incredibly attractive given what the stock price has done over the last year or so.
From a consolidation part from the top to the drop.
If your Apple computer,
the golden pocket,
right, you've got two strategies you can pursue to get in the digital economy. One strategy is you just buy $50 billion of Bitcoin. And 3 people can do it.